Hello everyone, this is Rahul Jakaria from Sharekhan. Welcome back to exciting 3R actionable stock updates. 3R basically means right sector, right quality and right valuation. These are our investment ideas. Today we have an update on Saregama India Ltd. Our analyst maintains positive view on Saregama with a price target of Rs 640, as we believe that in the near to medium term, uptick from subscription on streaming apps and advertising revenue on the short format app would be strong growth drivers. Although the company focus on investing in new content to future-proof the business is currently a drag on margins, the long-term benefit of this investment are expected to be felt for the next 60 to 80 years. We expect sales CAGR of 20% and PAT CAGR of 16% over FY24 to 27. At current market price, the stock trades at 50 times its FY25, 40 times FY26 and 32.1 times FY27 EPS. Next we cover Indian Hotels Company. Our analyst maintains buy on Indian Hotels with a revised price target of Rs 805. Indian Hotels Q2 performance on like-for-like basis was strong, despite lean season with hotel business revenues growing by 16% year-on-year and EBITDA growing by 30% year-on-year. Consolidated revenues grew by 27% and EBITDA grew by 41% year-on-year, respectively in Q2. Despite high base, revenue will grow by 10% in second half. October 2024 revenues grew by 16.5% year-on-year. Strong wedding season and foreign tourist arrivals will drive growth in November to December 2024. Gross cash stood at Rs 2,460 crore in first half of FY25. Cash flow conversion improved to 67% in first half versus 56% in first half of FY24. Indian Hotels focuses on prudent capital allocation strategy to drive growth. Stock currently trades at 31 times FY25, 26 times FY26 and 21 times FY27 EV by EBITDA. Last week our HiTech Pipes. Our analyst retains positive view on HiTech Pipes with an upside of 29%, considering its strong net earning growth outlook over FY24 to 27. Consolidated revenues lagged, although volume remained strong for Q2. Operational and net earnings beat estimate led by sales mix and support from suppliers. For FY25, the management retains sales volume target of 5 lakh ton, while EBITDA per ton is expected to be on upward trend with increase in value-added products share. After commissioning of 1.7 LTPA Sikandrabad in Q4, it would achieve its 1 MTPA capacity. It is moving net phase of capacity expansion to achieve 2 MTPA over 3 to 4 years.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.